Let's try to understand the fifth step in revenue recognition, which is recognizing the revenue when entity performs its obligation. Let's take the example of Apple Incorporation, wherein Apple sold one phone to a customer for $1,200. Now, the performance obligation for Apple is to deliver the phone. When it will be satisfied? When the customer takes the possession of the phone. So, Apple has given the phone to the customer. And on the receipt of the phone by customer, Apple will recognize $1,200 as its revenue. Let's take another example wherein someone has taken the Microsoft subscription. Now Microsoft has sold this subscription for 12 months for $120. Now the performance obligation for Microsoft is to provide access to Office 365, and when it will be satisfied on a month basis, when the customer will be using or not using, it doesn't matter, but he has access to use those Microsoft Office applications, then it will get satisfied month on month. So revenue recognition will be done like this, that $120 is there and it is for 12 months. So on a monthly basis, $10 will be recognized. Now for that, the accounting entry will be like this. On initial month, when the cash is received, so $120 is received. However, that is entirely your unearned revenue, so that becomes your liability first. So the entry will be cash account debit to unearned revenue. But when the month completes, then out of that $120 unearned revenue, $10 will become your revenue. So you will be crediting your revenue by $10, and out of this 120 you will be debiting 10, because still $110 are remaining as unearned revenue with you. Now for the same, the textbook definition is given like this. So textbook says that entity recognize revenue when the performance obligation is satisfied. In our case, Microsoft has given access to the software systems by transferring goods or services to the customer. And what the control does mean? Now the control simply means that customer can use the asset, he can use the phone, or he can use the Microsoft Office applications, or he can get benefit from it, or he can prevent others from using it. Now the phone is the under the ownership of the person who bought the iPhone, so he can prevent others from using it because now he has the control on it. Similarly, the performance obligations may be satisfied at any point of time or over the time. Just like in the case of phone, immediately the performance obligation was done, and it can be done over the period of time, just like 12 months. So at the point of time happens when control is altogether transferred, and over the period of time happens when control is transferred gradually over the period, just like in the case of construction contracts or service contracts, etc.